This resilience is the most bullish signal we have ever seen. When a market ignores bad news, it is a bull market. When a market ignores a direct regulatory attack, it is a supercycle. We are witnessing the birth of the Teflon market. Nothing sticks to it. The suppression tactics that worked for decades are bouncing off the armor of physical demand. To understand the magnitude of what just happened, we have to look at the mechanics of the smash that failed. Yesterday, when the news broke, we saw a dip. The price dropped to $83.50. That was the algorithm reacting. That was the weak hands folding. For about 4 hours, it looked like the banks had won. It looked like they had successfully capped the price at $85. But then something miraculous happened. The dip buyers stepped in. Who buys a dip in the face of a margin hike? Who steps in front of a regulatory freight train? It is not the retail speculator on Reddit. The retail speculator is terrified of margin calls. The entity that bought the dip at $83.50 is an entity that does not care about margin. It is an entity that pays cash. It is an entity that intends to take the metal off the exchange and never bring it back. This confirms our thesis that the paper market has lost its power. The margin hike only affects traders who are borrowing money to bet on the price. It does not affect Samsung. It does not affect the Reserve Bank of India. It does not affect the Chinese solar manufacturer. If you are buying physical metal for industrial use, a margin hike on the COMEX is irrelevant noise. In fact, it is a gift. It knocks the price down for a few hours, allowing you to buy your inventory at a discount. The banks inadvertently put silver on sale for the very people who are draining their vaults. They are feeding the beast they are trying to starve.